right, welcome back. Let's finish auto insurance. So this is clip 3, slides 29 through, I can't remember, 35 I think. So let's finish auto insurance. So how are accident victims compensated? And this really has to do with the legal relationship that that people have when an accident happens, and how the insurance companies respond to claims. So, states use a number of approaches to protect accident victims from irresponsible or reckless drivers, and we've already talked about uninsured motorists, and we've talked about underinsured motorist coverage. Okay. Some states have what are called financial responsibility laws. Okay, and so there's compulsory auto liability that people must have in order to drive, and if you get pulled over in these states, they're going to ask you for your license, your driver's license, your registration, and your proof of insurance. Okay, Arkansas is one of those states. Now, in some states, you actually have to post a bond in order to be able to drive, and this usually happens after you've been pulled over. Okay. In some states, you have to prove that you have resources available to pay a claim. So, all these things are intended to make sure that if a motorist is at fault in an accident and injures someone else, that the person who is injured will get compensated. Okay? But there are problems with it. Okay? And not all accident victims are paid. Okay? And the compulsory liability limits are low. Okay? All right, some states have what's called an unsatisfied judgment fund, okay, to compensate accident victims. Okay? In order to qualify for this, first of all, the victim must obtain a legal judgment against a negligent motorist and show that they have attempted to make collection and they cannot collect from that negligent motorist. And the amounts, anytime you get a bailout from the government, the amount is going to be limited. It's not going to be as high as the judgment, probably. Okay? And then the state will turn around and chase after that negligent driver and try to get that person to pay. Okay? The way states pay for this typically is they ask the insurance companies to kick into the fund. All right. There are companies out there that sell what are called low-cost auto insurance policies, and they provide minimum amounts of liability at reduced rates if you can show proof that you cannot afford regular insurance. Okay, and so these are low-cost, low-minimum plans, policies that you have to show proof of need. Okay. Some states have what's called no pay, no play, and what they're trying to do is penalize people who do not have insurance. They're trying to scare them into having insurance by saying, if you are involved in an accident that's not your fault, but you don't have insurance, you cannot sue negligent drivers who hit you. Okay? So they're putting a cap. They're trying to punish people who don't have insurance to scare them into getting insurance. Not a bad way to go for the states. All right, no fault auto insurance. Several states have no fault. Okay? And so with no fault, after an accident that involves bodily injury, each party collects from his or her own insurance company, okay, and the insurance company does not try to subrogate. So there aren't any legal proceedings involved in these cases, okay, and you just collect from your insurance company. All right, and then there's no pain and suffering here, but you get reimbursed by your company for medical expenses, for your loss of earnings while you are out of work, for medical services that are provided to you to help you get back together, funeral expenses if they're involved, and any survivor's benefits. So the companies in the policies will offer money if you lose a family member who was a breadwinner for the family, then the insurance company will kick in a monthly payment. That's what a survivor loss benefit is. All right, there are different kinds of no-fault insurance plans. Okay, pure no-fault, the victim gives up the right to sue. Okay, that's the purpose or the point of no-fault. No legal costs. Okay, then you have what's called modified no-fault, and you have a limited right to sue. Okay. All right, so if the claim exceeds the dollar amount that is paid by the no-fault, then under modified you can sue for that. Then there's this thing called choice no-fault, which is similar to a modified no-fault. The motorist can elect to be in the state's no-fault law or plan and pay the lower premiums, or they can pay a higher premium and retain the right to sue. Okay, so you're in a state that offers a no-fault plan, you can opt out of the no-fault plan so that you can sue. All right, high-risk drivers. High-risk drivers. So these are people who have been involved in numerous accidents or traffic violations, and many states have what's called an assigned risk plan. All right, and these are for people who are not able to obtain insurance. Either they're rejected or the price is too high. Okay, and all of the auto insurers in the state have to pick up a proportionate share of high-risk drivers under this plan, and again, it's state by state. The premiums charged are still are high, but you are able to get insurance. So if you must drive and you must have insurance, then you get into an assigned risk plan. Okay, there's not a whole lot of difference between the assigned risk plan and a joint underwriting association. Or now here's a different approach, a reinsurance facility, okay, that will share the risk. So if an insurance company picks up a high-risk person and that high-risk person causes an accident and is sued and the insurance company has to pay, then the insurance company recovers from the reinsurance facility. Okay, so that's a little different approach, but they're all trying to do the same thing, which is share the risk so that high-risk drivers can afford to have insurance. All right, so what factors affect how much you're going to pay? Okay, and this is an important question. So your location, and you can see the average annual premiums. It's really expensive in Detroit, okay, and it's really inexpensive. Looks like Winston-Salem is the cheapest of the areas, under $1,000. Okay, so your location is affected by the weather patterns, the hazards that are caused, out there, and perils, and the population density, how much traffic there is. All right, so your age, when you're really young or really old, it's expensive. Your gender, men cost more than women because they're crazy drivers, men are. Your experience driving, so the longer you drive, the lower your rate's going to be. Married people pay less than unmarried people because they tend to be calmer. All right. What you're using the auto for, are you driving it to work only and it's a short drive? Your education level, okay, the more education you have, the less expensive your rates are. What your driving record and your claims record looks like. The type of car that you're driving, that's a biggie. If you're driving a sports car or a high-powered car or a luxury car, it's going to cost you more. Your credit rating also impacts your premiums, and then your annual mileage. And the more miles you drive each year, the higher your premium is going to be. So all of these things impact the premiums that you're going to pay for your vehicle. Okay, and it can make quite a difference. All right, so here's some tips for those of you who are buying auto insurance. First, always carry adequate liability insurance. My recommendation is go above and beyond the minimum requirements. It doesn't cost much. Okay? Shop around. The offers you're going to get from different insurance companies will vary by a lot, so it's worth shopping around. Don't just go to a person you go to church with and you're friends with and go, okay, I'm going to stick with this person. Shop around. All right. You might want to carry a little bit higher deductibles. Yeah, that's going to hurt if you have an accident, but it's going to keep your annual cost down. And it will also, the insurance companies like it when you do that because they know you're not going to mess with them on small claims. All right, do what you can to avoid getting tickets. Okay, be a careful driver. All right. Talk to your insurance agent about any discounts that are available. There are a lot of discounts out there, and you have to ask for them often. Okay? Pay your bills. All right? If you pay your bills, then your credit score will be good. Talked to somebody the other day who's got a credit score of 800. That impacts a lot of things in your life that are good. All right. And then if you're driving an older vehicle, that's not worth a whole lot, you might want to consider dropping your collision and your comprehensive on the cars and just maintaining your liability. But ask your agent what the cost is before you do that. If it's not a big cost savings, then don't do that. Always ask your agent before you make these decisions. All right, that's it on auto insurance, and we'll see you in the next chapter, which is, I think we're going to do health insurance next. Peace out. Shalom.